This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashardis. Thanks for joining us at XM.com. Widespread relief in financial markets that President Trump stopped short of announcing damaging sanctions on China buoyed risk assets on the first trading day of June. While the U.S. is still planning on stripping Hong Kong of its special status, Trump's announcement on Friday was short on details, leading investors to believe that any future action will be measured and proportionate. More importantly, Trump steered clear of threatening to tear up his much-prized Phase 1 trade deal in his latest dispute with Beijing, easing fears of a major flare-up in U.S.-China tensions. Stocks were back on the front foot, with shares in Hong Kong surging by 3.4%, though U.S. futures pointed to more moderate gains on Wall Street. In the FX world, the dollar and yen slipped as risk appetite recovered from Friday's blip. The dollar index slumped to a fresh 2.5-month low as the euro and pound extended their rebounds. But the biggest gainer on Monday was the Australian dollar, which surged to a near 4-month high on the back of the ebb in Sino-US frictions and on expectations the RBA will keep policy steady at its meeting on Tuesday. But as markets cheer Trump's muted response to China's tightening grip over the autonomous territory of Hong Kong, investors may be underestimating the likelihood of more severe measures in the future. In addition, mass protests are spreading across U.S. cities over the racist killing of a black person by a police officer last week. With the unrest getting worse, there's a growing fear that the riots will not only hamper businesses' efforts to return to normality after weeks of shutdowns, but the large crowds will cause a spike in coronavirus cases just as they are starting to come down. All this kept gold in demand despite the broader risk-on mood in the markets. Also defying gravity on Monday was the pound, which added 0.6% against the greenback, even as the latest round of Brexit talks that are due to start tomorrow appear to be headed nowhere. The euro has been enjoying its own stimulus boost as the European Central Bank is expected to increase its pandemic emergency purchase program when it meets on Thursday. This was today's Daily Market Comment. Thanks for joining us at XM.com.